Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Wednesday morning and the cues are looking extremely positive for our markets, although globally things are really mixed. Wall Street, of course, cooled off from record highs ahead of the big decision by the US Federal Reserve later tonight. Asian markets were also fairly mixed. GIFT Nifty, however, was indicating a positive start for our markets. Of course, yesterday we had a very good day. It was a weekly expiry, Tuesday weekly expiry for the Nifty. And of course, we saw bulls gain traction after a muted start yesterday. We clocked in the 25,250 level, although we didn't really shut shop above that level, but we managed to close above that 25,200 mark. And experts have been saying that if we close above that 25,250 mark decisively, 25,400 to 25,550, these are the levels that the bulls could retest going forward. So, things are looking good for us. Given the fact that we are coming off a very strong session, we have had a buy figure on the fund flow front from the FIIs. So that's also a relief, so to say. And of course, in terms of the talks, the trade talks with the US, things are looking extremely positive at the current juncture. Of course, yesterday the US negotiator was in India and we had positive forward-looking chat with both sides actually had positive forward-looking chat. So that gives rise to hopes of a deal pretty soon. Also, the fact that today is Prime Minister Modi's birthday and his good friend Trump was among the first world leaders to wish him. So yes, that's a fair bit of bond-homing between Trump and PM Modi, and that is, of course, signaling signs of a thaw, because initially, in fact, last couple of weeks back, there was a fair bit of tension when it comes to India-US relations, but that seems to be abating with all the recent developments. So lots to digest. We have a lot of stocks as well to watch out for. Jindal Steel will be in focus. It is looking to acquire Thyssenkrupp's German steel unit. So that stock will be in focus. And of course, Urban Company that will make its D Street debut at 10 a.m. today. Saw very strong demand and the IPO got subscribed multiple times. So yes, that will also be in focus. Also in focus, your stock related queries, keep them coming in. We will try and get them addressed as we go ahead on the show. But before we bring on board our experts, let's take a look at the top headlines at this hour. Wall Street retreated from record levels to end the session lower as investors await the big Federal Reserve decision later today. All eyes will be on the dot plot or the guidance on the future rate cut path going forward. Asian markets trade mixed. The Nikkei was extending gains after clocking in that 45,000 level for the first time yesterday. Although the Chinese markets were trading in the red, the GIFT Nifty is indicating a higher start for our markets. Crude oil prices rise 1%, extending their rally due to supply risks in Russia. Yet another record high for gold. Prices head to uncharted territories, rising past the $3,700 an ounce on Fed rate cut bets. India and United States held positive negotiations, says the Commerce Ministry and the US Embassy. Top US negotiator Brendan Lynch visited New Delhi for the first time since US imposed 50% tariffs. India's Commerce Ministry says efforts will be intensified to achieve an early conclusion of a trade agreement. And as trade talks accelerate, US President Trump dials PM Modi to wish him on his 75th birthday. PM Modi says he is committed to taking India-US comprehensive and global partnership to new heights as India supports Trump's initiatives towards a peaceful resolution of the Ukraine conflict. All right, 12 minutes to market open. In the pre-open, you can see green ticks. The Nifty around the 25,274 mark, 34-point uptick. But in terms of yesterday's action, all-round gains and with the Nifty, in fact, perched at an over 2-month high. The good part is that the Nifty Bank Index ended above that crucial 55,000 level. In fact, it was above 55,100, and these levels, are back on the charts for the Nifty Bank Index for the first time in a month. Broader markets also moved in tandem with the benchmarks. The market breadth was positive at 2:1, except FMCG. All the other sectors ended in the green. Autos are back to their winning ways. Aside of that, if you look at the FII buy figure, that was fairly meager, so to say, but nevertheless it was a buy figure, and we'll take heart from that. FI's net bought stocks worth over 300 crore rupees in the cash market. DI buying support continues. Domestic institutional investors bought shares worth 1500 crore rupees in the cash market. In terms of the FNOQs, the Nifty put call ratio jumped to 1.29 vis-a-vis 1.08 in the previous session. Stocks in FNO ban, no new additions or deletions, but 4 stocks in FNO ban for today: Angel One, HFCL, Oracle Finance and RBL Bank. Well, 25,200 is back on the charts. Let's understand the setup for today and what does it look like for the rest of the week. Joining me is Ruchit Jain, Vice President Technical Research at Motilal Oswal Financial Services. Ruchit, always a pleasure. Things are looking up. We have, of course, been looking at the bulls, in fact, going one way, except for Monday, of course. Yesterday, we picked up pace, 25,250. We reclaimed that on an intraday basis. Do you expect 25,450 this week itself if we manage to hold above that 25,250 level today?
Yeah, hi, very good morning, Ananda. Well, I think, no, yes, the probability is quite high that we would see that 24,450, 25,450, 25,500 range, in this week itself. Primarily because we have in the last couple of months already seen a corrective phase, which was a time-wise as well as a price-wise correction. Initially, market made a high of around 25,670 on 30th of June. And post that entire July month, we had seen a decent price-wise correction. The index formed a good support base around its 200 DMA. And then we witnessed some time-wise corrective phase over last 1.5 months. So clearly, we have already seen a price-wise as well as time-wise correction phase in the market, and we are witnessing a lot of broader-based buying interest, where you can see since last few days the broader markets are doing well. And in yesterday's session, it was the index or the large cap space, which also showed some positive moves. Now, FIS still has much short positions in the market, which were their long short ratio is just around 12-13% even now. So there is considerable space for that short covering move to come in the market. So we anticipate that 25,500 should be seen in this week itself. So one can look to trade with a positive bias at current levels also.
Got your point. 25,500 cannot be ruled out this week itself. But one engine that wasn't really firing up was the Nifty Bank Index, right? But that kind of changed yesterday. We managed to hold on to that 55,100 level. Are the charts suggesting that this move that we saw yesterday is sustainable and we can look at higher levels from here? Or would you expect a bout of profit taking to kick in? What are the charts saying?
Yes, there was some amount of correction in the banking and some underperformance was there, but the index managed to form a good support around its 200-day EMA and has seen a positive move, especially some of the NBFC space is also looking positive. So I think banking and as well as NBFC, this should do well in this leg of rally, and we could see an up move in the Bank Nifty towards 56,000 mark very soon, which was a high which we had seen in mid of August. So at current levels also, the 20-day MA should act as a support, which is 54,700. Until 54,700 is intact, one can look for trading with a positive bias for potential of move towards 56,000.
Okay, look for potential up move towards 56,000 on the Nifty Bank Index. But one pocket that has also been in focus is the metal index, right? Things are working for metal, so to say, given the fact that we are looking at a Fed rate cut today. Dollar index has been cooling off. In fact, it's sub 97 levels as well. And of course, on the fundamental side, we also know that China's involution drive is something that could benefit metals going forward. But in terms of specific stocks, Jindal Steel is in focus. It has made a non-binding offer to acquire the German steel unit of Thyssenkrupp. Thyssenkrupp shares, of course, saw a good rally, after this news. But in terms of JSPL, how would you expect the charts to behave today? And would you look at these steel stocks, or would you look at some of the other names, non-ferrous names like Nalco, Hindalco, etc.? We have a couple of queries on our feed on some of these metal names, Hindalco, Nalco. Your thoughts on the entire metal universe and how steel stocks, particularly Jindal Steel, stack up now?
So overall, we generally see an inverse correlation between the dollar index and the metal space. Whenever dollar index sees a downtrend, metals generally tend to show an up move. We have already seen that in the case of base metals, where gold and silver has rallied significantly in this recently when the dollar index has corrected from the highs. Now the rally is also getting, I think, could get spread to other metals, maybe such as copper or so. So I think even if you look at the stocks within this space, I think the stocks from the commodity space should see a good momentum on the positive side, at least in the short term. Steel stocks are definitely looking positive with stocks such as JSW Steel trading around its 52-week high, Tata Steel showing a good up move followed by consolidation. Even Jindal Steel, which is in the news, had seen good support base formation around 1980 zone. So price-wise downside seems to be limited in the short term. I think till dollar index is down, and I know as you said about the Fed rate cut as well, I think that should support the metal stocks steady. But yes, it could be a broad-based move, which it's where it would not be restricted only till the steel stocks, but we can see stocks such as Hindustan Copper, which has seen price up more, supported by very good volumes in this week. If you look at the volumes in last three trading sessions compared with the average recently, then we have seen very high volumes compared to average. So Hind Copper is there. I think this is one stock which has potential to show some good momentum in the short term.
Okay, that's about the metal universe. Of course, you mentioned gold, and gold has been hitting record highs every other day. Yesterday, it topped that $3,700 dollars per ounce mark as well. And even the domestically, we have seen gold financiers do extremely well, right? The likes of Manappuram, Muthoot, they are all perched around that 52-week highs. More upside, and would you say that the risk reward is looking okay even at these levels for both Muthoot and Manappuram?
Yes, I think they are in a structural uptrend, and we usually see a direct correlation that whenever the gold prices are rallying, Muthoot and Manappuram both tend to do well because of the business impact. So yes, since we are continuously witnessing an up move in the metal space, we should see a continuation of the uptrend here as well. So Manappuram specifically after a long phase of consolidation, I think relatively should do well from current levels, and a gradual up move could be expected, and the risk reward ratio is still favorable over there. We are positive on both Muthoot as well as Manappuram, and I think this rally should get continued going ahead.
Okay, we're positive on both Muthoot as well as Manappuram. Let's talk about Coal India as well. The stock is in news. It has emerged as a preferred bidder for a rare earth element exploration block. This stock will be in focus because of that. Looking at the charts of a Coal India, how would you look at it? It's showing somewhere around 1.5% up in the pre-open. The stock has seen a steady move on the upside. 402 is where it's at. Still over 100 rupees away from 52-week highs. Is there a chance that the stock would, accelerate or see accelerated momentum and head towards 450 levels anytime soon?
One should look this stock more from a positional or delivery-based perspective rather than very short-term trading. We might see a positive impact of these news flows in a day or two. But the stock has seen a significant consolidation and a correction over last 1 year. And I think these are prices where the risk reward ratio is very much favorable if you want to take delivery-based positions and you can hold for certain quarters. So I think yes, overall momentum seems on the positive side, but no, this is one stock which I would not recommend from a very short-term trading perspective. But no, more interest should be taken from a delivery-based perspective to go long on Coal India at current levels.
Okay, don't look at it from a short-term perspective, but positional play. That's how you should be positioned in a Coal India. But just about 2 minutes for markets to open. Any recommendations that you would like to make for our viewers, Ruchit?
So, a couple of names where we are quite positive. One is auto and auto ancillary space. We think that overall trends could continue. And within the auto ancillaries, tires is one segment which technically looks quite strong. Apollo tires would be one stock which I would recommend at current levels to go long on. The stock has seen a bullish flag pattern breakout on the daily charts. The 20-day MA has acted as a good support for the stock. So keeping a stop loss below 476, one can go long on Apollo tires at current levels for potential targets around 520. And another name which we are positive from a near-term perspective is Larsen and Toubro, the heavyweight. We have seen that overall some consolidation has been there over last few months. but the stock has managed to form a good support base around its 200-day exponential moving average. Until this level is intact, we believe that price-wise downside now seems to be very limited from here on. So keeping a stop loss below 3,500, short-term traders can go long on Larsen and Toubro as well. We expect a movement towards 38.50 very soon.
All right, L&T and Apollo Tyres. In fact, we had a couple of queries on our feed on Apollo Tyres. Hope that answers your query, because 520, that level was also mentioned by Ruchit. So keep an eye out for that, and it looks like a good play. So hope that answers your queries. I think it's Ravuthar as well as Anil. These two people wanted your thoughts on Apollo. So that's addressed for now. But just about 8 seconds to go for the markets to open. Ruchit, hold that thought. We'll come back to you. First ticks are indicating that, yes, it's a 50-point move on the index. We are around, in fact, 25,300 on the charts as we speak. So yes, that level has been cleared. The Nifty, Sensex is up somewhere around 200 points. 82,500, very close to 600. 82,600. That's the level on the screens for Sensex as well. The broader end of the markets continue their upward momentum as well. The mid-cap index is up almost 0.5%. Look at the advanced decline ratio, almost 5:1, very, very strong at the current juncture, but we'll have to wait for things to settle. Too early to really say whether the breadth will be that strong throughout the day. But 1,500 advances to 340 declines. Breadth looking extremely strong. The Nifty Bank Index, 55,280, that's where it's at. So yes, picking up from where we left yesterday. And in terms of sectors, I want to see what metals and IT are doing. IT will be in focus on the back of the expected 25 basis point rate cut by the US Federal Reserve. Tonight is when they declare their interest rate decision. 25 basis point, that's the that's the anticipation, but if at all it's a 50 basis point, that will be a positive surprise. IT up 0.5%, all the sectors participating as of now. Yesterday FMCG was sitting out, but today FMCG is also participating, up almost 0.5%. Sectoral leader at the current juncture is IT, that's up 0.5%. Pharma trading with mild gains, autos continuing their upward move, metals doing well, 0.3% kind of gain there. PSU banks also up 0.3%. Realty index is up another 0.5%. So yes, all round buying, and of course it's pretty much visible on the charts for the Nifty as well. 25,300, we are round about that level. But in terms of individual stocks, consumption names were among the top laggards yesterday, the likes of Tata Consumer, but today Tata Consumer is taking the lead. That's a top Nifty gainer, followed by Coal India. And of course, Bharat Electronics order wins, since September. There's some data that's come out, and that stock is reacting to that. Ultratech Cement, up in the green. A lot of bullish calls coming in on cement. So yes, cement pocket in focus. Grasim is also doing well, up 1%. Tata Motors, Trent, that was a laggard yesterday, has managed to bounce back, up 1%. Infosys doing well today. Geo Financial, NTPC. Bajaj group of stocks like Bajaj Auto, Bajaj Finance doing well. Reliance Industries among gainers. Yesterday as well, Reliance was providing support to the index, and today as well, Reliance among gainers. 0.3% kind of gain coming in on the charts of Reliance Industries. What's not doing all that well? Pharma names ones back under pressure today. Dr. Readies, Cipla, they are among the laggards on the Nifty. Adani Ports, that's the top one. Tata Steel, Tech Mahindra, Titan, Bharti Airtel, these are among the laggards, and Eicher Motors is also among the laggards today, and so are the likes of IndusInd Bank, HDFC Life, Power Grid, etc. Even TCS for that matter are not doing all that well. Just want to see the charts of Jindal Steel, down 0.5%, so no major reaction. In fact, no, it's up somewhere around 0.8%. So yes, Jindal Steel, of course, on the back of that non-binding offer for Thyssenkrupp's German steel unit. Looking at the open, we are seeing a mixed picture across the IT universe today, and sporadically we have seen good days for IT as well. Ruchit, so ahead of the Fed outcome, how should one be positioned in IT? Mid-cap names saw good traction yesterday, the likes of Persistent, etc. Today, what should the call be on IT?
I think IT is already one space which has corrected significantly and has shown a decent underperformance. But I think no, here we could see some stock specific momentum going ahead. If no, definitely Fed cuts interest rate, that would be good. No, where we should see a positive move in no certain IT stocks. But yes, one should be very selective within this space. No stocks such as Infosys is there. Emphasis is there, which within the mid cap basket is looking positive. So I think certain stocks can do well. So trade with a positive bias, but be very no selective in picking stocks.
Okay, take note of the names that were mentioned by Ruchit. Be selective in IT, and Infosys was among the ones that Ruchit named out. Of course, the company has announced its largest ever buyback of 18,000 crore rupees recently. I think I saw a query on Infosys on our feed. Hope this answers your query. That's one stock that you can really look at from the IT pack. But couple of stocks that were in focus yesterday, I want to draw your attention to that. Amber Enterprises that hit a record high yesterday. QIP has opened floor price of somewhere around 7,790 rupees or thereabouts. But after yesterday's move, how would you look at Amber Enterprises? Would you say that the risk reward is kind of not looking all that attractive at these levels?
The overall trend still for Amber looks positive. We have seen a consolidation followed by breakout in yesterday's trading session, and we should see a continuation of the momentum on the positive side in Amber since the price of moves have also been supported by good volumes. So 8,000 from a trading perspective, 8,000 to 79.50 remains a crucial support. Until this is intact, no one should stay on the long side if any existing positions are there.
Okay, that's the view on Amber, but there's another stock that saw one-way move, shot up quite a lot. Yesterday was Reddington. There were some block deals in the counter, but it was up somewhere around 20%. And today we have a couple of queries on this particular counter from Nitin Shahji and Naveen. Both of them want to know your thoughts on Reddington. How would you trade into it after yesterday's move? Would you advise chasing the kind of move it saw yesterday? Or would you advise them to kind of book profits? How should you look at Reddington after yesterday's move?
Post some correction, we have seen a good no buying interest in yesterday's trading session. If we look at the volumes in yesterday's trading session, then certainly they were quite high no, compared to the daily average. So I think it's no already some correction has been done. So these are not the prices where one should look to exit if any existing long positions are there. But if for fresh buying, I would recommend a buy and dip approach no, for the stock since already it is up by 20% yesterday and the stock losses are too far from current levels. So if we get any minor declines in the near future, then one can keep a buy and dip approach for ready.
Buy on dip approach, keep that approach for a Reddington. Hope that answers your queries. I spotted a query on a Tata Consumer. This stock has given good returns in tandem with other FMCG stocks. It has had its down days as well. Is it a buy on dip, Tata Consumer? There's a query from NP Gandhi on this particular counter.
Yeah, the sector as a whole, if you see the FMCG sector, then we have not seen any kind of significant outperformance coming in so far. But Tata Consumer has seen more of a consolidation base where support base has been formed around 1,050, 1,030 range. So till this is intact, if you have any existing long positions, you can hold on your existing longs. And the stock needs a breakout above 1,150 for any kind of positive trend to come in the stock. So hold your existing positions above 1150. You can expect some good momentum on the positive side.
Okay, hold. That's the call. There's one stock that's in news, and I want to talk about it. Dream Folk Services. The company has discontinued services of domestic airport lounges effective 16th of September. Other domestic services and global lounge business will continue as usual. The stock has been under severe pressure, Ruchit. Look at the YTD chart, it's down 70%. Is this a sustained downtrend? Because there has been no signs of any kind of recovery. Did, I think manage to do, clock in some gains, but last 3-4 weeks it has given up all of that as well. Any thoughts here, Dream Folks?
The broader trend has been negative for the stock. Even since last few months, we had seen when the broader markets have seen a good rally. We have not seen any kind of participation coming in from stocks such as Dream Folks. So definitely when the trend is negative, markets are going up, but still the stock is not participating. It's better to exit from such name and look for other opportunities, where some good returns could be made, or at least these losses, if any, then can be covered. But dream firm clearly is an avoid. Even if you're looking for fresh buying or averaging, you should not do in that, and look for opportunity to exit from this one.
Okay, that's the view on a dream, folks. But let's talk about Aditya Birla Fashion and Trent as well. Aditya Birla Fashion has launched a value retail brand called Owned, and that's targeting the Gen Z, and it is planning to open 100 stores this year and 400 stores in the next 3 to 4 years. There's a overweight call on this particular counter from Morgan Stanley, and they have a target price of 131 or so. But if you look at the stock, last 5 sessions, it has been fairly, range bound sideways. For Trent as well, Trent has, of course, been stuck in a sideways move as well. In the last 1 month or so, it has already shed 6% or so. On the charts, which one is looking more appealing now between the two?
Well, Trent, I think, no, has seen an underperformance recently. So I think that this consolidation phase could continue in Trent going ahead. Not expecting any significant up move to coming in Trent. So I would not recommend going long at current levels. ABFRL also, some sort of pullback move has been seen from the lower levels. But how much sustainable it would be, that needs to be seen. So just based on these news flows, I think one should keep the stock on radar, but keep a wait and watch approach in case if we see follow buying with good volumes, then one should look for opportunities there.
Okay, that's the view. But let's shift focus to some more queries then. There's a query coming in from Salman, and he wants to know your thoughts on GNA Axles. He's making a loss on this counter. He's not mentioned his buy price or how many shares he holds. But how should he navigate, Ruchit?
Overall, it seems to be in a consolidation phase, but no, we have seen some positive momentum no, in the auto ancillary space, and the stock has already seen some price-wise correction and is trading around its support. So have some patience. I would recommend and hold on for now. But 293 is the level that you should watch out for and keep your stop losses on existing long positions. So keep a stop loss below 293 and hold your existing positions.
Okay, that's the view. Keep some bit of patience there. I hope that answers your query. What about Amara Raja? Satya CK has a query. Wants to know your thoughts on this particular counter on the for the next 6 months. What are the levels in particular that he should be watching out for? In terms of targets, what should he keep in mind?
So overall, that stock has seen some consolidation, but the stock is hovering near no very important level, which is its 200 DMA. And if we see a follow-up move from current levels, then no 1090 would be very important breakout level. But beyond which we can expect levels around 1200 to 1220. So hold the stock at current levels. Keep a stop loss below the support, which is around 990 levels. So if 990s remain intact, then you can expect an up move towards 1200 going ahead.
Okay, that's a call on Amara Raja. Hope that answers your query, Satya. I spotted a query on MobiKwik. This one's coming in from Geetu Sandesh. The stock has had a good run in the last month or so. It has seen a very good recovery. But, once again, looks like, kind of getting into a consolidation phase. Is it just a temporary blip after the rally, or what are the charts telling you?
So I think this could be just a correction within an uptrend. Overall, the positional structures are not much negative over there. So I would recommend still to hold on if any existing positions are there.
Okay, that's about Amara Raja. Hope that answers your query. There's a, I beg your pardon, about MobiKwik. There is a query that has come in on Prajit Prakash has written in, wants to know your thoughts on PNB. He's bought it at 111. He wants to know whether he should hold or exit. He's making a slight loss here, but given the fact that PSU banks have seen good traction, would it make sense for him to hold on to it?
Yes, I think no, it should hold on because PSU banking space as a whole has seen a good consolidation. Even if you look at the charts, then stocks such as Canara Bank is there, SBI is there. No, they are on the verge of the breakout from this huge consolidation. So, in case if we see a good follow-up move in next 1 or 2 weeks, then we could expect some momentum in PSU banking space. And PNB has already seen a good correction around 200 DMA. The stock has formed a support which is around 100, So the price-wise downside seems to be limited from here on. It's just that the momentum needs to be picked up. Then one can expect the levels around 115, which were the previous swing highs of mid-July. So review your positions when the stock comes around 115. At current levels, you can hold on your existing positions.
Okay, that's the view on PNB. Hope that answers your query. Couple of queries we've already addressed, but let's take up one on M&M. Then this one's coming in from Arpan Kar. Says that of course the stock has lost its sheen after a sudden charge towards 52-week high. Wants to know how to navigate this stock. M&M of course has seen good traction, but then did see some bit of correction as well. Is it a buy on dip?
So overall trend for M&M no, remains positive. Just last 3-4 trading sessions, I think we have seen some kind of corrective, but that does not change the broader trend for the stock. Yes, so one should keep a buy on dip strategy. Recently, we had seen a gap up opening around 3400, 3450. So on any declines, now that no previous resistance or that gap of 3400, 3450 would become a support. So if you have any existing positions, this is one stock. Have some patience and continue to hold on your existing long positions. And if you get any dip towards that 3400, 3450, you can take that as an opportunity to add more to your portfolio.
That's the view. The overall trend remains positive. The last query then, I want to pick up this query from Satvika Ranganathan on a BMW Industries. Hasn't really sent a pointed query, but the stock has done absolutely nothing over the last month. What's your thought here? It's at 48 odd. Quite a few. The 52-week high is at 75 odd levels. How do you see this chart performing going forward?
So the overall does not seem to be much positive. And Anita, if you see, then no, the stock has not done that well. I think it's only a BSE listed stock, and the stock has not done that well when the broader markets had seen a good run up. High was made in Jan 2024, but post that we have not seen any kind of high top, high bottom structure still. So the trend does not seem to be positive for now in this stock.
That's the view. So looks like it's a clear avoid at the current juncture. Satvika, I hope that answers your query. But with that, of course, we've come to the end of the query segment. If you couldn't take up your queries, please don't get disheartened. Keep them coming in. We will get them addressed the next day if we couldn't do so today. But with that, Rujit, would like to thank you for taking out time and joining in and sharing your thoughts. Always a pleasure, and look forward to
Thank
connecting
you.
again sometime soon.
Thank you very
Thanks a
much.
lot. On that note, take a look at the market. We are holding on to that 25,300 level. The broader end of the market is moving largely in tandem with the benchmarks. The bank Nifty as well holding on to that 55,200 level. Breadth solid as of now, almost 3:1. That's the NSE advanced decline ratio. And IT was doing well, taking the lead ahead of the Fed rate decision that looms and of course comes out later today. But on that note, let me bring on board the big market voice that we always get at 9:30 a.m. Sunil Subramaniam, market expert as always. Sunil, lovely chatting with you, and this seems to be a month where it's seasonally a weak month, right? If you look at how we have performed in September, both globally and domestically. But this month to date, we've seen the Nifty regaining traction, 3% kind of up move on a month to date basis. Global markets have been hitting record highs almost every other day. So it doesn't seem to be a month where you say wake me up when September ends. Things are falling into place in terms of the US India trade talks as well. A lot of bonhomie between Trump and PM, who has his birthday today as well. So how are things looking? Do you think September will be a turnaround month where FIIs also come back as we are looking at a Fed rate cut today?
I'm surely hoping so. And so, what I'm reminded of, I don't know, you've seen Diwali Dulhania?
Who has not seen
Well,
that movie? Any movie lover would
okay.
watch it.
So what I'm reminded about is Shah Rukh looking at Kajol and saying, "Palat, palat." और वो पलटेगी तो so exactly the same with Mr. Trump, right? The whole thing has been about anticipating, and he palted. You may say he palat. So I think that's the thing story which has been playing out because rapidly, I think he's probably done 5 tweets which are pro-India. After that, India, I've lost India to China and Russia tweet, and then he's come back with so many strong things, including the latest one, wishing, calling
Hmm.
up the PM and talking to him. So I think that that's what is the read of the market because you asked about September being a weak month, and economy wise, it is going to be a weak month because people are going to be postponing all their purchases till the 22nd because of the GST rate cuts, right? So the numbers for this quarter may not look great, but the markets are saying that I'm aware of this and I'm looking beyond this, right? So, how is Diwali going to be doing? How's the monsoon going to be playing out its story? And how are the corporates? Are they, willing to support the government by actually passing on a majority of the rate cuts onto the customer? So, I think that that positivity has obviously been there with the DIIs. But from an FI perspective, I think it's this change, and I don't know whether I mentioned it, Nanta, in my earlier shows with you, that one of the reasons the FIs have been weak on India, right? The valuation is, something that's been beaten to death. Everybody is
Hmm.
talking about it. But I think there's an important two other factors. One I'll tell right now, one we'll probably discuss when we discuss the Fed rate cut situation. Is that see what the FIs have, if you look at last year, right, April to September last year, markets were rising because FIs were buying. And it was not that in April of last year, India was any cheap. India was at the roughly the same or even higher levels of PE ratio, right? Why were the FIs willing to buy then, and why were they not willing to buy now? The difference is that what the tariff has done is affected India's long-term growth prospects. So I'm just saying that see, we have built enough defense mechanism against the tariff. That's why even S&P in their rating said that India can counter the tariff and still upgraded our rating. Fitch, in fact, has come and said that we'll probably hit 6.9% this year. So, in a sense of the short-term impact of the tariffs, right? Apart from those specific textile, leather, those autocoms, those which are directly affected by the tariff, the overall scenario is that India's GDP growth is well on track to remain at the 6.5. But FIs are not buying the 6.5 or 6.7 or 7 of this year and next year. They are buying the growth of India into 7.5, 8, 8.5 over the next 5 years, the decadal growth. Now, for that, right, we need to be exporting to the US. And that's where the tariffs have come and damaged the longer term story of India. And that's why, if you see, longer term FIs have been hesitant to put in money, and short term FIs have been booking profits. That's because they've got opportunities in China and other markets which are far more reasonably valued. So, where I'm coming from is, so this news that India could be, on the easing front on the tariff. See, the second 25% obviously expect market expects it to go away now because it's all about Russia. And in yesterday's tweet, he says, "Thank you for helping end the Russia-Ukraine war." I don't know what is pipe he's smoking. He means that how have we helped him solve the Russia? Neither is the Russia-Ukraine war looking at a solution. But he just retweeted that. So what I'm coming to say is that the second 25% he realized that it didn't work. It brought Putin to Alaska,
Hmm.
made them chat. That's it. After which Putin has doubled down and Ukraine has even doubled down. The war has only escalated after that. But, and that's why in his tweet, he is now roped in NATO to say now he wants NATO to help put tariff on China because he alone doesn't have the guts because he imports what? He's got a net trade deficit of $400 billion with China. He can't afford to do that. China holds $800 billion of US government securities. So, and they hold rare earth control. So there's a lot of things that he cannot do individually against China. So he's really roping in 10, NATO to try and do that. But in that message, there's no point of India. So I think that clearly in the
Hmm.
trade talks, I see from the Indian point of view in a silent way saying, let's talk about the core 25%. No, the second 25%, there's no justification. And if you want, right, we can always buy oil from you also. It's not as if we'll buy only from Russia. We are buying from a number of countries. Russia is a big one because they give us a discount. Now, if you want, we can buy oil from the US because oil prices are internationally determined. So that could be one of the agreements which I feel could be an early win, that US, India agrees to buy X barrels of oil from US, and then that 25% goes away, the second 25. On the other 25, I would still say that, there's not too much optimism that the red lines would be broken, right? Which is in terms of your agri and dairy access, as well as, allowing American companies into that is one of the main things that they want. There may be a tough situation that we might allow, some of the, high-end cheeses, for example. Some where media they'll come out. So where I'm coming from is from an FI, wearing my FI hat again once more, is that they now see that we are now, compared to a month ago when we were like the dog in the thing, right? Right from Navarro to Scott Besant to everybody was piling onto India. So now actually the trade aid comes here, talks, Trump talks, which means there is some light. And so once that comes through, it means that the medium term growth story of India comes back into play. We can reasonably hope, because remember, US is 30% of world GDP. No country in the world can think of having a super growth rate without being selling to the US, because the US is so expensive as a market. All this MAGA, all of those are political things. There's no real way that Americans can buy America manufactured products, because the cost in India is $1.50 per hour. In US is 30. So it's 20 times the cost. Now, which American would be willing to pay 20 times what he pays for anything just because of the patriotic MAGA thing? So I think MAGA is just a political gambit. He will do it. He will try and get some business there, some wins he will show, which is all politicals and PR. But bottom line is, a country like the US, which is a demand-driven economy, consuming high-end products, needs to have a low-cost manufacturing country supplying to it. Yes, the earlier balance of trade between China and America was tilted heavily in China's favor. That's the reason he had to put the tariffs. Because of the $26, US is at $30 manufacturing cost per hour, China is at 4. So the $26 difference in cost was largely eaten by China, retained by them, because US had no choice. That did. Even today, they don't have a choice because India is not ready yet to substitute China. We don't have the skill, we don't have the technology, we don't have the AI, we don't have the, those kind of things to compete. But we are a dream for the future. So where I'm coming from is that difference between 30 and 4 out of the $26, China probably took away 20 and made US is one of the biggest borrowers in the world with a unsustainable fiscal deficit and all of that. The new terms of agreement, which if India is to work towards being a substitute for China in America's eyes over a decade, over the next decade, will be a more reasonable share of the savings, because there will be more with India. 30 minus 1.5 is $28.50 per hour. That will be a more equitable share, not like the what China did. But it is important for India because whatever we get is plus. Today, 2% of the world exports is our manufacturing trade goods export share. So where I'm coming from, just to cut the story short, is that this news is probably the single biggest news which would make a longer term FII think back to investing in India, and valuations be damned. Because when you're buying a longer term story, these valuations are 1 year forward PE. When I, as a pension fund, am investing in a 15-year outlook, what do I care about what the 1 year forward PE? I want to calculate my discounted cash flow of a potential stock in India for the next 5, 10, 15 years in a reasonable growth story. So I think that's where I believe that. And yesterday, a small thing where I think there was a 300 crore positive FIF flow. I hope it's correlated to this. But over the last week itself, I've been seeing that. Like in last week, remember, 2 out of the 5 days was positive and one day was just 100 crore negative. So the situation
Yeah, yesterday as
marginally.
well it was positive.
Correct. So I think that to that extent, I see this as a green light. And the more the positive news comes out of these talks, and Mr. Navarro can kindly keep quiet on the side and not add more fuel to the fire right now, I think it will lead to a tilting of the longer term FIS towards India. The shorter term FIS are also going to be. I'll tell you why. Because the depreciation of the rupee is a key factor for hedge funds. And if the tariff situation was not going to get easily solved, India was going to need to aggressively devalue the rupee to counter the tariff. And that was a fear why, one of the reasons why shorter. I said I'll mention the second reason later, right? Because for them, a fear of rupee being depreciated for help the exporters counter the tariff means that their investments will get eroded due to that capital depreciation on currency. So they were being smart, saying, let's see this situation grow. Now, even they will tend to come back because India won't feel the need to depreciate the rupee so much. And so then comes to the Fed rate cut. Because what happens is that 25 basis points is market is taken for granted. If it's 50, let's talk about it. If it's 50, then
Yeah.
obviously the dollar is going to weaken and the interest rates are going to come down. The pressure on the RBI to cut is going to be there because, but if it's a tariff situation, RBI would have not cut and let it depreciate, right? But because the tariff situation is improving, the RBI will also want to keep a more balanced approach. So the possibility of an RBI rate cut then goes up. See, RBI has got to be taking that factor into account. But all early days. But I'm just saying that compared to the pessimism that we had some weeks ago on the FII flows, of course, since August 15th, it's been positive for domestic of the GST cuts. But from an FII perspective, right, the tariffs has been overhang. There is a lightening of the dark clouds there, and one hopes that they do turn into a silver lining and maybe into good. So, like I said, so that's why September it's been good from that sense from a market perspective, is because I think Mr. Trump's palate, coming back to my starting word, has helped FII take the foot off the pedal on selling in India, which itself is a big thing because you say markets will respond very positively because DIA buying is constant. So any delta that
Yeah.
comes through
That's been
from the
there.
FII will take the market quite higher. So I think that yes. So in all, I think I'm optimistic of a good September because of the return of the prodigal FII.
Okay, so return of the prodigal FIIs could be baked in. Of course, because of Trump's palat, let's hope that we see a palat, kaya palat, so to say, from FIIs soonest as well. Because of course, we also have the Fed rate outcome today, and if it's a 50 basis point, as you pointed out, of course, that could be another trigger. But let's talk about themes then, because we've covered quite a lot of ground in your first, in the first, question that really we spoke about. IT, you have been, a contrarian when it comes to IT. You've always been saying that, once FIs come back, IT, which has seen quite a fair bit of underperformance, would start firing up. So, in terms of IT, of course, we've already discussed a few stocks in the past. But post the buyback announcement by Infosys, that was its largest ever, do you expect more companies to come out with buybacks? And from a shareholder perspective, would that really benefit because of the changes in taxation? What are your thoughts on the overall buyback coming back in the IT space?
Sure. Before I address this, just one more point I want to make on the FII flow because it's relevant to IT is that one of the reasons why the FII selling was very high was because of withdrawal by investors from India specific and emerging market ETFs because they were not favoring, they were wanting to put their money in the US market. Especially there was some India specific, you saw massive outflows. Okay. So why I'm saying this is that if the FI rate cut happens, the Fed rate cut happens, sorry, then the risk on will mean a lot more money coming into passives, emerging market passives. And India, as you know, has a 17% share of the MSCI emerging market index. So what I'm saying is that that buying will come in and IT is a 10-11% weightage in the MSCI index. So you will get a passive amount of money coming in and buying IT. So that's one of the things which is going to drive IT up is just the allocation from the passive. So it's not necessarily an active call. It's just an active emerging market call into which IT will benefit. That's one. Right now to come to the all the questions. Yes, see, buybacks are not a tax efficient way because of the taxation rules have changed. Okay. And hence, I don't expect a domino effect of the Infosys buyback to lead to buybacks by other IT companies, right? Now, why did Infosys then do the buyback, right? What you got to look at it is that for them, they're sitting on a huge pile of cash. I think about 45,000 crores. Okay. They're using, I think, about 18,000 crores in the buyback process. So, when I'm coming from is they're trying to shore up the share price rather than do anything else by reducing the stock in the float, right? That's what a buyback achieves, right? That's one. Second is you got to also see because of the taxation how far will be successful because they're going in the open offer route, right? So we'll have to wait and see how that pans out. But the key thing is that why I also don't expect other companies to follow through. One is, of course, it's not a good tax way of giving money back. Rather pay a hefty dividend rather than do a buyback. Number one. Number two is that I think that all the IT companies will need cash to buy good potential mid-sized AI companies. 'Cause that's the way they will defend. They cannot overnight create an AI culture. You see, the layoffs from TCS, all of that was getting rid of the people who are not fitting in. And they'll probably take freshers who they will train. But if the IT companies have to make a what do you call short circuit into this AI related consulting work, I think that they will have to go and buy some good quality international companies, right? And they'll need cash for that. Now, in case of Infi, they still have 26,000 crores of cash, even if the buyback grows to 18,000 crores. So it's not a worry. They have adequate money. But all other IT companies also, it's a question of, are they targeting potential acquisitions? Are there discussions happening with investment bankers? How much do they expect the price? So that cash on the balance sheet, right, for them is something which is they would not want to commit it and give it away today. So I don't expect this to really follow through in that context of that. But I continue to retain my bullish view on IT. In fact, the most surprising thing probably is that post August 15, I think the Nifty is up about less than 3%, 2.75%. But the IT index is up 4%, which is something nothing to do with the GST cut, but it's actually beaten the market. And that's because of two, three things. One is, like I said, I think that it was oversold. So, more from a technical point of view, I think there was too much bad news being thought about these companies are old word. In fact, when Oracle's stock went up that day, there was a big headline in newspaper saying Oracle is the forward-looking future company. Indian IT companies are backward-looking. There's a lot of negativity around the fact, but these are cash-generating machines who have seen multiple changes in the world order, whether it's the financial crisis, whether it's the dot-com boom, whether it's the YTK, and they have survived and grown. And AI is something they will absorb and they will do. So we should have the confidence, and that's the confidence I carry. I think that they are good quality companies, very low debt on the balance sheet, throwing out cash, who can go and do mergers and acquisitions without needing to have financing to do that. They have cash, and hence they will thrive and grow. Obviously, you don't know which of these companies will do the best acquisition, so you should stay invested in the pack. The second aspect here is that, though of course we talked about tariff concerns easing, but if the tariff situation was continuing, was this rupee weakening, right? The rupee weakening is, if at all positive for anybody, is positive for IT. So obviously that also played a part. And
Yeah.
especially when FIs come in, for them it's a natural hedge. Because IT companies earn their money in dollars, so to the extent of the stocks there, they won't face that rupee depreciation's impact. So for that's why FIs also favor IT companies in such situations. The third aspect is the rate cut. Rate cut is positive for the BFSI sector. Now, as you know, Indian IT companies on an average sell 55 to 60% to America, and within that 55 to 60%, another 60 odd percent is to the BFSI space. So, if the BFSI space is going to rally in the US and the outlook is good, then they will also start investing on the tech backend in the AI, which is where AI consulting, I believe, is the next wave of growth for IT. And the companies that actually go and do that through acquisitions or somewhat is the ones which are going to be the winners. And the banking sector space there is obviously going to face challenges of AI. They will need consulting, advice on that, and that could be an opportunity. So overall, like I said, I continue to retain my positive outlook on the IT space, and I think that market is starting to show that recovery, and I think that it will sustain for some time.
Okay, that's about IT, but there are a couple of other themes, emerging themes, so to say. I want to draw your attention to the data center story as well. A couple of days ago, I was just going through a report from Jefferies where they are expecting capacity to grow 5x by 2030 in the next 5 years or so. How does one position themselves for this boom, so to say? Should one play through the infrastructure power kind of plays, or should one look at the telecom end of the spectrum? How should one play it? And of course, there are other newer themes mushrooming around this data center, which is like data center cooling solutions, etc. Should one position themselves in that end as well? How would you look at this
See,
entire thing?
so I think that's a lot of news is in the price, but at the same time, the growth could surprise. So
Okay.
what I would say is that you mentioned, should I do this? Should I do that? I should say, do all of it. Buy everything, diversify it across, because don't go and try to pick the winners. Okay, but pick the sector.
Hmm.
That sector and its manifold manifestations, and which are all the ones real estate will benefit from it, right? Because of the need for huge
Hmm.
places.
Yeah.
So I think that overall, you mentioned telecom, mentioned power, you mentioned infrastructure, the whole gamut. So have a portfolio which is designed to benefit, because today pure clarity of a data center play is very highly richly valued and priced well. So you cannot expect that kind of growth, but we have to wait for the numbers to happen. But my thing is that definitely this is a big growth space. I'm no doubt about it. So diversify is my saying. Don't leave anything to chance. Buy everything and keep it in your portfolio. And this is diversification will help. So that's the way I approach any of these new age technology where, if you go back to the classic days of Zomato versus Swiggy, just go and buy both. No, why are you trying to pick whether Zomato will win or Swiggy will win? Why are you going trying to pick the winner, right? Okay, you'll make half the profits, right? But you'll make half those profits. You're not that you picked the wrong horse and made losses, no? So I'm saying that that's the way any new emerging space which looks hot and happening, I would say buy everything. That's the best way for a
Sure.
normal investor, because we don't have the benefit of really knowing underlying the deals, what's happening, what's that. There's a lot of question marks around that, but there's a good story there. So buy the story, buy pretty much everything that's available there in reasonable proportion, diversify across the place, and be present there.
All right, that's about the data center theme. But one theme that has been picking up space or speed, so to say, once again, is the railway stocks, right? Do you think Street is looking beyond the execution risks that companies also flagged off, and of course that has been one of the concerns. And Off late, railways companies have been bagging a lot of orders. So the focus has moved there once again. So is the up move that we've seen in railway stocks off late, is it durable? Could it extend, or do you think it's just a one-time thing that it's moving on the back of order wins?
See, I'm a bit nervous about railways, to be honest. And like you said, for me, those execution risks are very key, important. Yes, there's a story of India's tier two, tier three cities also going down the metro way, right? So that's a huge amount of thing where a lot of manufacturing can take place in the various space. So order books will be good and good, but execution still remains, and especially since of the PSU element where there is always, inefficiencies at play, right? So to me, it's a standalone. I would say I hesitate to take that risk because I think the valuations are quite rich. So yes, over a 5, 10, 15 period, it may pay off. But if you have the patience, rather, I believe that as part of an overall infra pack, if railways forms a part of it, that's the best way to play it. Don't put all your eggs onto the railways part, because I think those execution risks and the inefficiencies of the PSUs are two big drags on those, which the market, in my opinion, is not fully pricing those negative risks. They're only pricing the good news.
Okay, that's about railways. But what about logistics? I've been reading quite a few bullish reports on logistics, and of course, as consumption rises, logistics is another sector that stands to benefit. Anything that catches your attention within the logistics space? Would you look at newer age companies like delivery, or the oil and gas logistics companies like Aegis, etc. would catch your fancy?
No, actually speaking, that see, this new age logistics and related to consumption, all of that is just a near-term festival season thing, right? To me, the logistics play comes from a much deeper story, which is the story of the festival season being a blowout season on the top line. Bottom line, I'm not yet sure, because I think that companies will need to massive offer heavy discounts to push through those products. So margins will wait and see. But anyway, that's the second story on consumption. But the top line growth, I think there's not much doubt about it. And what that's going to lead to, I believe, is an increase in capacity utilization in the country. And I think the private capex cycle is now very close to really picking up steam. In the next 9 months to 12 months, I think it will pick up. Already in the power and green energy and a lot of those, already the green shoots are there. But on a broader manufacturing expansion cycle from the private sector, logistics is a huge part, because not just cement and steel, but all the machinery which gets to be manufactured is made in the clusters which are there in different parts of the country, are specialists for, like Coimbatore for textile machinery. Like you have clusters there, and from there they have to transport it to the ultimate. So overall logistics, I think, has a huge potential from a private sector capex out. So I think that to me, That's the story really to play. Because just talking about shifting of consumer durables is a Diwali Christmas event, right? And maybe in Chennai it's a Pongal event. But after that, what, right? So I would say that don't play the near term pop up in demand, but play the longer term story, which is a more structural story of a private capex revival. To me, that's the big story which is going to deliver value creation over the next 3 to 5 years.
All right. One more pocket that's been in focus is the metal pack. Of course, cyclical in nature, but a lot is working in favor of metals, right? Dollar index sub 97 levels. We have the Fed rate cut, of course, that we are anticipating. And another big factor is that involution drive that's underway in China. Metals expected to benefit as a result of that. But even domestically, the steel duty has been extended for 3 years. So the safeguard is also in place when it comes to steel. So how does one play the metal universe now? Should they look at the ferrous end of it, non-ferrous end of it? And how should one look at this entire pocket given its cyclicality as well?
So are you including gold and silver within the metals pack? Tell me that.
No, I'm not. No, no,
Because
I'm
you
not.
mentioned the Fed
That's a
rate cut,
separate
the
question
dollars will
altogether.
be. That's a great question. Okay. So non-gold silver metals, right? Uh, Now, see, one thing is that I have a slightly contra view on this whole China thing. So I think Chinese economy, the infrastructure boom days are past. It's now a consumption story that the government is trying to stimulate. Okay. And under the consumption play, China, which is today 50% of the world ferrous, non-ferrous, non-gold silver part demand is right. I don't think that the past that they are going to be at that 50% because for consumption, you don't need that much of steel or iron ore or copper or aluminum or whatever, right? Because it was the past, which was the housing boom plus the Chinese infrastructure boom that led to that. So I'm of the view that there's going to be a softening of the metal demand from a China perspective. Now, domestically, yes, the infra cycle boom will mean it's good for the ferrous metals and for the non-ferrous also, because copper and aluminum are also needed in electrical wiring and all of that, right? So demand side of story is strong and good in domestically also. But prices for metals are set at the London Metal Exchange, not in India. So the local demand supply does not alter the price of steel. So you are at the whims and fancies. So that's why metals are treated as a pack called global cyclicals. So the global cyclical is the world is in a slowdown space. China is shifting from infra to a consumption story. They are trying massive stimulus. Will not don't know whether it will work or not work. So from a perspective of that, I am very cautious about metals. Right? It's a very tactical play. Sometimes you feel they are oversold. You go and buy a little bit, but as a structural story, right? Unless the world comes beyond the tariff scenario and looks at a world growth path, forget about India for the time being, right? Metals are not something which are going to go through a multi-year bull run, according to me. So, to that extent, I would say that you be cautious about it. Domestically, like I said, the government has to put these barriers to protect the industry, right? So you are looking at it as a defense, right? Not as an offensive note. So I would say, as far as your infra pack, metals will be a play, domestic metals, and definitely ferrous, non-ferrous, both have a building materials component to it, which will benefit. All factories which expand need metals there. All machinery, industrials need metals. So I don't see a problem at all on the domestic demand side. But from a steel or this company's perspective, his profit margins are a function of price into quantity. Quantities will be good. What will be the price? God only knows. We don't know how the internal scenario is going to pan out. So I would say that it's hard to take a buy and hold call. It's a tactical call, and you're probably better off relying on technical experts rather than fundamentals in terms of when you enter and when you exit.
All right, got your point. Always interesting chatting with you, Sunil. Lots of perspective, point of view taken, and of course, a lot more questions as well. But of course, we'll save it for another day. Always a pleasure, Sunil. Look forward to again interacting sometime soon. Lots to really watch out for in terms of the India-US talks, how they go ahead from here, and of course, once FIs come back, I'm definitely calling you on the show again. Thank you.
Sure. Absolutely. Thank you.
Thanks a lot. On that note, take a look at the market. We have picked up steam, almost 90-point uptick on the index now, 25,330. That's where the Nifty is at, and the Sensex is also up over 250 points now. Broader end of the markets, although have cooled off slightly, but nevertheless in the positive zone. Well, with that, we've come to the end of this edition of Opening Bell. Of course, we'll catch you at closing at 3:30 p.m. Don't forget to tune in for that. Till then, of course, stay tuned to moneycontrol.com for all your news and, on the latest on the market and on the corporate front as well. And, of course, have a great day from the entire team that put the show together. Thank you for watching. But before we go, here's a message for viewers. Introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today itself. Thank you for watching. Signing out from the studio now. I'll see you at 3:30 p.m.